Hi traders and welcome to the Friday Market Watch on the 27th of March. So I've seen another action-packed week with a lot of big movements on the currencies and the indices in general. So we'll jump straight into the charts and see if we can identify any trades for today or early into next week. All right, so we'll start out here with the Aussie dollar, and we can see that very quickly in this week's action, we've seen the level that we talked about last week at 68.70 be hit only recently in today's trading, but it did it and it came down fairly quickly. Look, when we knew that we had momentum on the way down, even though we had a bit of volatility at the start of the week, obviously some very big candles, the main point here is that the support was broken. And when you go to a smaller time frame, and you can probably go to whichever one you want, we can start out even here for the 1 hour. When you're actually trading this actively, obviously it had a bit of a shock through and bounced back very quickly. There was no trade in that regard because it didn't bounce back to a level that would have been acceptable. But when it did break through the second time, it came back and touched it. That could have got you in. Then it came back and touched it again, and that would have got you in. And both of these zones were sell zones because we knew that that support had been broken. And any retest of that level, the first candle that looked weak after that test is a potential entry. And then, of course, we had the pullbacks to the 20 moving average. So happy days on that regard. Even on probably the 4 hour would show you the same thing. One of my favorite charts. Again, the first one you missed completely because it never gave you an entry. But the second time certainly did on both occasions, and then down it came. So look, hopefully you're able to get that sort of 68.80 was the target. Hopefully you're able to get hold of that because it was a pretty good trade. When something or a level like this breaks and so significantly, the next target that is generally highlighted by a lot of price action, and that's highlighted by action all the way back through here. So you've got to zoom right out to see it, but you can see why and how important this level is. It's right through here. Very heavy sell-off at that point. Okay, so that's why that level is so important. And now, what we're probably expecting is a little bit of a bounce off from here. I would expect that if we see any series of higher highs and higher lows on a smaller time frame, we would look at taking it back up and trying to trade it back up to around that 70-cent mark, so about 120 pips from around here. Of course, if it closes down below, that's our next very heavy support zone broken. If it breaks through there and retests it from above, then we're looking at the 66.80 as the probable target for the sell side. So very interesting trading on the Aussie. Hopefully you're able to get hold of that. It's been very, very good from a technical standpoint. So we've seen some really, really good moves that have played the game in terms of predetermined levels. And that's the important part, that you get those levels actually working from a technical standpoint. And it's done that in spades, really. So that's been really good. We'll move over to the dollar index now, the all-important dollar index. And you look, it hit the support at the 20 moving average. Very important that it did that on Monday. Obviously, it was a very wild day on Monday. Like, we know that, right? That's across all of the trading instruments that you would have seen. But what it did do, after it stabilized a little bit, we've seen some pretty solid movement from that 20 moving average. It did its job. It caught price. And it's had two relatively strong days. Again, you can go to a smaller time frame if you really want to trade it. That's what we're looking for. Higher high, higher lows. Off it came again. This was a really good entry point. Back around that sort of 99.70-ish area. The euro is obviously the one you want to trade in these instances. You want to be looking at the euro as the entry point and the exit point for actually placing a trade. But the dollar index gives us the guidance, and it's been really strong. So really good trading on it. Again, even on a 15-minute, you would have seen all of the moves, pullbacks to a 20 moving average all the way up. So really good trading there. We will touch on the euro in a second. But look, now it's do or die time in terms of where it needs to go on the upside. We want that 150 target hit again, ideally. And you can see that we've got quite a bit of momentum, obviously, this week. All we're looking for now is a break of this little mini zone at around the 100.05. If we get a break above there, then we're looking for that 40 to 50 points up to get to that previous high that is a likely target if we get any more momentum and a break of this zone. Look, if we go to the euro, again, it sold off at the 20 moving average. Perfect trading in that regard. Bounced off, found resistance where it needed to find resistance at the 20 moving average, but it's also a role reversal zone. And it's very important to remember that. Aside from the fact that it is at the 116 flat, look at all the price action there. Look at all of these wicks that reacted from that level. Again, there, right through there, right through all these levels here. I'm not going to put a line there because you guys know what I'm talking about, and it's important that we don't put too many lines on the chart. Otherwise, you start to get confused of where your support and resistance actually is. But really, really good sell-off there. Once it started to move down, once again, we see the weakness. If you go to a smaller time frame, you will see the sequences of lower highs and lower lows happening, and once you get those in pull back to a 20, pretty straightforward trading. So hopefully you were able to get hold of that one too. That was, from a technical standpoint, a very, very comfortable trade. Hopefully you were able to get a good portion of that, because targets now, in terms of where it could go, if it continues to sell off, probably 114.80 would be the target around this level here. Pretty strong level. As you know, we've got quite a bit of action in this zone. That would be my target. If it rolls up and starts as a higher low sequence on a smaller time frame, I'd be aiming for the 20 and that 116.20 as the target on the upside. So both of those are likely targets, and pretty good trading on either side. So keep an eye on those ones. All the important S&P 500 looking really, really ordinary in the last session. Obviously, we can see that we've got the lower high, lower low sequences came all the way back down to that really significant support at 64, sort of 70-ish here. You can see that the big red candle kicked in, closed up. Look, it's trying its best to stay above that 6,500 right now. Obviously, it's not in the US session, so it's going to take another full US session probably to really determine whether it's actually going to be a support level or if it's going to break through. We are probably in a bit of trouble if it does break past this 64.50. That's the probably line in the sand for me. If we get past that level there, the next real support is around that sort of 62.30 to 62.20. And as much as that seems a little bit outrageous in terms of the moves that, from where we are now, it's been very, very weak. And we know why. Like, there's obviously reasons all over the place why there is a weakness in the market. Some of it is speculative, some of it is waiting and anticipation. The market is unsure, and when the market is unsure, it's going to either rest at these very key levels or it's going to break through them. And if it does break through, the next key level is generally where it wants to get to, and that's what markets like security, and that security blanket often comes in areas that it's been comfortable before. So right about now, the next very heavy support is going to be where all of this action happened previously on its way up at around that sort of 62.30. So let's just see what it does. It's got to break 64.50 with a daily close in my mind to really break that level properly. So if we get a break past there, I'd be going to the smaller time frames, looking for sequences of lower highs and lower lows on the smaller time frames as well, pullbacks to the 20 moving average, and I guess navigate it down to around that level. But that's where I expect the next key level of support to be if we get a break past here. If for another reason we start to sequence higher high and higher lows on a smaller time frame, I'd be looking at the 20 moving average, wherever that may lay in that trading period that you're trading, as a target for the upside, because that would be the more than likely gravitational pull. It's been like that right through. Again, the market gravitates to the mean, and that mean is above it at the moment. So if we do start to sequence higher, the 20 moving average would be the likely target for the long. So really, really good trading on the S&P 500. Look, even though it looked like it fell like a rock, if you go to a smaller time frame, you're going to see some pretty good opportunities all the way through. Like, you can see the sequences all the way down in their little mini blocks, pullbacks to the 20 moving average, again, all the way down. So hopefully all the technicals that we've been talking about for a long time now are playing out really nicely, even though there's a lot of volatility in the market. All right, we'll move over to gold, one of the most popular at the moment. Look, it's been steadying over the last week. We had a very big shock. I mean, it obviously came down a very, very heavy amount, all the way down to 4,100 in that candle there on the Monday. It bounced up quite significantly, and it's traded in a relatively tight range, given the extended moves that we've seen over the last little bit. Now that it's found itself in a bit of a range here, until it breaks that range, I'd be probably trading it and scalping it inside. So anywhere between 45.30 to the lows of around 43.50. They would be the two zones that I would be using as a scalping mechanism for take profits. So on the high or on the low side of that, when we get a daily break on either side of those levels, that is when we would look for a bigger move, either back up to the 20 moving average if it breaks to the upside, or back to the lows at 4,100 if that break is to the downside. So really just block up those two levels, the closes of these two candles here. Aim for that level in terms of scalping on the upside, or down here at 43.60 on the downside, a daily close on either side of those candles, and then we would be looking at those next bigger targets at around 4,100 or the moving average, wherever that may lay. But that will probably be a little bit lower by the time that happens if we don't get a massive movement on the market in the next trading session. So we'll see how that one goes. All right. Thanks, everyone, for joining us this week and obviously every week that we've been doing this. We obviously appreciate your support and we love bringing the technical analysis to you, especially with the volatility that we've seen. It's good to see it make sense, and it's great to see the email saying that people have been able to take advantage of some of these key levels. So have a fantastic weekend and just keep your stop losses on your trades relatively tight because we still are in a very volatile market. Thanks, everyone.